Let's bring in Paul Hunter, who's in our Washington Bureau, who's been watching this along with us. Paul, let's walk through what the president had to say.
Yeah, John, well, in a sense, he said, take a breath, have confidence, believe in the system. Your money's there and available to you in whatever bank you use right now. Rest assured, as he put it. Believe in the regulations that came out of the 2008 crisis, which this isn't, and believe in the steps his administration took this weekend to prevent this from spreading. Trust him, was his message, that he will hold to account those responsible for what's happened in California, and trust him that taxpayer money is not what's coming to the aid of SVB right now. Those were his headlines. Worth noting as well, John, he thought it crucial enough to warrant going on national television at 9 o'clock this morning Eastern time. Those are the messages he very much wants heard, and heard early. We saw the lineups at U.S. banks over the weekend. He wants to stop people from thinking they need to do that, and he wants to stop it quickly. This is all about preventing contagion or spreading, something Biden is hardly alone in hoping can be achieved.
As Scott Peterson has been reminding us this morning, the president had to speak before the markets opened in 23 minutes from now. That was key. When Wall Street gets going on this, we've seen around the world markets struggling to deal with what could be or might be the fallout of all of this. But he made another of other comments in terms of his record. Paul, let's talk about the politics around this and the challenges that it poses for him, his presidency, and his agenda.
Sure. Look, the politics of this are all about making sure, in one sense, that taxpayers don't think this is a government bailout of super rich venture capitalists. For the moment, that's a big part of who has lost money here. Biden wants people to know not only is this not a bailout, i.e. free taxpayer money for them, but that those who made wrong-minded decisions that led to SVB's failure will be held accountable. He emphasized that in those remarks. That aside, the balancing act here is that the U.S. economy right now is a major challenge for Biden as we head into the 2024 election cycle. He's taken heat already for inflation and, in turn, for the high interest rates, a key factor, by the way, cited in SVB's collapse. And now this banking collapse and accompanying jitters are in front of him. He is, meanwhile, evidently set to officially announce he is running for re-election. And so it's vital for him that this be sorted quickly and to the degree possible without significant economic or financial fallout. If contagion happens and other banks teeter and a bailout is seen as a necessary tool, he risks losing the cred he has of, fighting for the regular voter and instead of padding the pockets of the rich. Or if he doesn't, come to a bailout point, the risk is that contagion, if it comes, could spread and hurt everyone. That's all a ways down the line, John, and only hypothetical at this point, but it's surely on Biden's radar. He knows he needs to stop this, and he needs to stop it quickly.
And this is all happening very quickly. Paul, thanks so much for this. Appreciate your time.
You're welcome.
CBC's Paul Hunter live in our Washington, D.C. Bureau. For more on this, we're joined now by Karl Schamotta. Now, he is the chief market strategist at Corpay, and he joins us from Toronto today. Karl, thanks so much for joining us. Really appreciate your time.
Absolutely. Great to be here on such a busy day.
Well, exactly. A lot to understand around all this, a lot to get our heads around. The Superintendent of Financial Institutions has seized control of SVB, that in this country. So what exactly does that mean?
Right. So that means essentially that they're going to look to put lending activities on pause. They're going to most likely look to sell off the assets of the Canadian unit, and essentially sort of ring fence the Canadian banking sector against any further systemic risk that could emanate from this collapse in a relatively important U.S. lender.
So what does this mean in terms of the daily activities for Canadian, let's begin with bankers and then we'll go to investors?
Right. So I don't think this is going to have an enormous impact directly. The Canadian unit was lending to, the Canadian venture sector. This will clearly diminish the flow into that sector over the coming months and years. That is unfortunately a drag on Canada's longer term productivity. But the big impact here is really what is happening south of the border, right? This fact that we're seeing these rising interest rates in the U.S. putting pressure on the U.S. banking sector, that sort of problems are widening out. What that will do is sort of diminish confidence in global financial markets. And weigh on Canadian equity markets. So, that means that investors need to brace themselves really for a very turbulent period ahead. And businesses and consumers will certainly need to watch this, in order to determine whether they should be confident about the future right now.
So arguably two things to get our heads around here in terms of what you're talking about, the waves that wash up on our shores from around the world, whatever is happening in terms of fallout from what's going on with SVB and Signature and what U.S. authorities are doing, but also the contributory factors to what happened to SVB, the rising interest rates, the issues, the trouble they had with the bonds, people wanting their money out and fast. Crypto, of course, is floating around out there in the equation, especially around Signature. So all of those factors do exist in this country. So what do we look at in terms of similar conditions and what effects we might feel because of those conditions on the Canadian banking sector moving forward?
Right. So, John, you nailed it right there. The fact is that, the big proximate cause behind all of this is that we had years of very, very cheap money. Many institutions, many individuals, many businesses added a lot of leverage. They borrowed a lot of money during that period. We've seen rates move up at perhaps the sharpest pace in modern history. And we're now beginning to see things break. And so the big challenge here in Canada is that our households, the household sector in Canada, is among the most indebted in the developed world. And so, as rates rise, we could see a retracement in terms of household behavior. We could see people spending a lot less money as they pay more to borrow money. And that could ultimately hit consumption in this country. So we could see a lot of weakness in the underlying economy. And all of that would be bad for the Canadian banking sector. That would, diminish earnings. I wouldn't say that we're looking at anything like what we've seen south of the border in the regional bank sector, but we could certainly see big headwinds for the Canadian banking sector in the months and years to come.
We've already seen, we saw it on Friday with the news of SVB coming out and Canadian banks losing some $19.7 billion in value. Now that's up and down as the market goes, but what impact could that have in the short term, and might we have to watch for more of that?
I think we do have to watch for more of that, and I think ultimately what it's all about is the fact that consumers and businesses are going to be more cautious. They're going to borrow less money. And when you borrow less money in Canada, that is negative for earnings at the banks. So, what investors are doing right now is they're telling us that we are going to see that sort of period of retrenchment. They're not saying, and I really want to sort of underline this, they're not saying that there's any systemic risk issues at Canadian banks. Canadian banks are not exposed in the same way to this, to sort of the long-dated securities portfolios that are hitting the regional banks in the U.S. And Canadian banks have very well diversified deposit bases. So, again, I just wanted to kind of underline that we're not looking at sort of a systemic issue here, but we are looking at headwinds for the sector. A year or, a couple of years at least in which banks underperform relative to their historic patterns.
So in all of that, then, various elements not getting away pain-free, at least as we watch this going forward. What are you going to watch for? It's hour to hour with this, but let's say in the coming days, at least, as far as this might affect Canadian investors and Canadian financial institutions.
Right. So I'm going to be watching interest rates most primarily because, what we are seeing is as this turmoil spreads, investors are radically changing how much they're expecting in rate hikes from the Federal Reserve. Here in Canada, we could be putting rate cuts back on the table. The Bank of Canada may, look at this and look at the sort of worsening turbulence in the economy, and they may think at some point that they need to provide some accommodation to the market, and so and to the wider economy. So I'll be watching interest rates very, very closely. If we do see yields drop pretty dramatically, that's going to be an indication that markets are bracing for rate cuts in the coming year. And then the other thing, of course, is the Canadian dollar. So far the Canadian dollar has sold off a little bit, but if we were to see more aggressive weakness in the Canadian dollar, that would again express investors' caution on the Canadian economy.
A lot to keep our eyes on. Karl, thanks for helping us do it.
Absolutely. Thanks for having me.
Chief Market Strategist at Corpay, Karl Schamotta. Thank you.